and welcome back to Fantasy Stockball with New Level. Ralph here. Championship week. Okay, so obviously we just got the two games, AFC and NFC, and let's get right into it. We have well, before we do, just full disclosure, as we've been for the last 2 years, we've been really kind of bearish, if you will, on the stock market as a whole. Of course, there's a couple of sectors and a couple of individual stocks that we feel strong about, but as a whole, the market has been frothy, in our opinion, for the last couple of years. Of course, there's different indicators, the price earning ratio, the debt to GDP ratio out there, and a couple other indicators that have shown that the market is running hot. But I got a real good indicator for you. So there's no secret that we run a real estate investment arm as well. In fact, it's the bulk of our portfolio, and we have members on our team that are huge parts of how we conduct business and just instrumental in the success of our business. And a couple of those members have recently, shown extreme interest in the market, so much so that they're actually giving advice on, different stocks to buy and Bitcoin and all that. And listen, brilliant guys, great at what they do. And I'm not saying that you have to be a rocket scientist to be an investor. In fact, the contrary is actually the contrary is right. Meaning that you don't have to be super duper smart. Really, all you have to do is just be a student, meaning just go out and study and be disciplined. And if you have those two ingredients, then you could be a great investor. It doesn't take brain surgery to have investments. In fact, there are people that I know that don't even have a high school diploma, but can put PhDs to bed when it comes to investing. Okay, so I'm not saying that. I'm not being snobbish and saying that someone that's doing maintenance work or whatever can't be an investor. They can, but when they've never shown interest before, and all of a sudden, because of 2020 and now the markets are hot and where they're running, you get this type of stuff. And these are, to me, that's a bigger indicator of where the market is. So, okay, let's put all that to sleep. Let's go ahead and get to our picks here. So first up, we're going to go, obviously there's Kansas City Chiefs versus the Buffalo Bills. And as long as Pat Mahomes is Pat Mahomes, meaning he's, there's no effects of the concussion, he doesn't play scared and timid and all that, and he just comes out and slings that ball, the Bills stops here. Get it? So I think the Bills had a good run. I kind of liken them to the Titans last year, how they upset the Patriots and then the Ravens, but they lost to Kansas City. I kind of see the Bills in the same format. They beat the Colts, they beat the Ravens, but I think it's just going to be too much Mahomes. And honestly, to be completely honest, I think Mahomes is going to be Mahomes. But I honestly think that Kansas City defense shown last week that they can, when it comes to when they need to step up, they can and will. And I think that defense is going to, be a little tough for the Bills offense. So I'm going to match. So I'm not going to go offense like we did with Pat Mahomes last week, even though he is the best quarterback in the league. We're going to keep it defensive, and we're going to match the Kansas City's defense up with stock symbol PSQ. It's an ETF, and I'm not big on ETFs, but kind of like this one here. It shorts the top 100 companies in the NASDAQ. So think Apple, Amazon, Netflix, Facebook, Google, these behemoths. And remember, the indices, whether that's the NASDAQ, whether that's Dow, New York Stock Exchange, they're weighted. They're a weighted index, meaning the bigger the company, the bigger piece of the index that they can manipulate. So, as an example, Apple could go up. They can go up a couple of points and be trading higher for the day. And because they're so big, even though you have 50 other companies that are trading lower for the day, Apple being an Apple can move that market, and the inverse is true as well. So with that being said, this particular ETF shorts the top 100 companies in the NASDAQ, and it's a good way to kind of hedge, right? Like, you don't have to be 100% bearish and 100% short of the market, but you can kind of, balance your portfolio to wherever you're leaning towards more, you put more emphasis. As an example, there's portfolios out there where you could do a 60-40 hedge split. In other words, you could be 60% long in the market, meaning that you think the stock market is going to continue to run. So I'm going to put 60% of my assets towards that thinking, and then 40% towards the bearish side. So that way, yes, you don't fully participate in the run up, but you also don't fully participate in the downfall. And as in another example, let's put some numbers to this. Let's say you have a cash portfolio of $10,000 that you're looking to put in the market. Well, if you do this 60-40 approach, you would put $6,000 towards, being long. So you might buy Apple, Amazon, whatever, and be long $6,000, and then you would put $4,000 to work investing in this PSQ ETF, $4,000 to work. So now you can ride the market when it goes up. Okay, and maybe you get out and not at the very top, but you lock in profits. And then as the market starts to topple over, you have this other 4,000 or 40% of your portfolio that's going to catch the other side. Okay, so it's just a good strategy to kind of play if you're bearish in the market, as well as still keeping some of your longer or some of your long positions in place as well. Okay, so that's what we like for the Kansas City defense. And now in the NFC, Green Bay versus Tampa Bay, the Battle of the Bays, right? And this game is intriguing to me because I honestly believe the NFL world wants to see Pat Mahomes go against Aaron Rodgers, right? It's kind of like the young phenom is looking in the mirror and seeing his older self. The potential is there for him to be the greatest quarterback of all time. They're in commercials together. So I think the league really wants to see this matchup. But on the flip side, I think that I could see the league also wanting to see Pat Mahomes go up against Tom Brady again. Because remember, they already faced each other, I want to say 2 times when Tom was in New England, obviously. One in the AFC Championship game, and then I think there was a regular season game. High scoring game. Great. Both of the games were great. So a three-peat would be great too. So I can see it going either way, but kind of like the Bills on the NFC side, I think Tampa, being on the road twice and now for a third time going up against the Packers, even though they haven't been dominant Packers, in the playoffs in Lambeau, in years past, it's still a tough place to play. And Rodgers looks really good. So we're going to go with the Green Bay defense, and we're going to match Green Bay up with CVS, pharmacy company. And right now, CVS's price earning ratio is slightly above 12. So it's really below where the market is currently, obviously, because the market's trading around like 38 times earnings. But historically, it's lower than the historical bar, which is about 15 times earnings. So it's cheap from that perspective. Now, they are up higher on the higher end of their 52-week high. I think they're trading around like $73 a share, and their high for the 52 weeks has been about 74. Their dividend yield is a little under 3, so from a dividend yield perspective, it's lower than I would like it to be. But I still think you get some of the upside appreciation in this company, as well as the dividend yield, because with the vaccines rolling out and all that, I think down the line, CVS and some of these other pharmacy companies will bode well for them. And they can pull on some other levers. Their market cap is around $91 billion, which isn't egregious. I mean, again, you got, I believe Shopify is at $140 billion. So I think there's some room there for CVS to continue to grow. And that's why we like it with the Packers defense. So hopefully, you learn something. Hopefully you can maneuver your portfolio to take advantage of what we think is a frothy market, AFC, NFC championship games this weekend, and tune in to see what our Super Bowl pick is going to look like. All right. Thanks for watching.